Welcome to Trading Lounge and the Indices report. Here we're looking at the US notes, however, and as you know with the notes, they move in the opposite direction of the US indices as such. So I don't have a lot of data on this particular platform for a continuous chart, so to speak, but in the bigger picture, we're basically looking at a triangle in terms of, it's a bit difficult to see because you don't have it here, but it's a little bit like this here. We're looking at wave D here as such, and then we're looking for a move down here for wave E to complete this triangle here, and A, B, C, D, and E for a larger call here, then a move up here for a larger primary wave 4 up around the 128 area, and then a move down. But what interests us at the moment is this particular move up through to here to be completed. Now, it's actually got trendline resistance from this high here on a certain angle coming through here. So we either have the high in, or we've got one more little high to go here. And the important thing about that is that once this breaks lower, then the US stocks will push up. So just on the intraday here, it's a little bit like this here in terms of above the 125 here, the A wave up, the B wave, and looking for a C wave here. So we're looking for 5 waves in this C wave here, and it's probable that this is wave 1, 2 in here, and then this is the third wave, and this is the fourth wave. Even though the fourth wave has pulled back a long way, I'll still consider it a fourth wave just for the time being, and especially why it's sort of sitting above group 1 really here. But as soon as it drops below the 125, then we know that this high here is in place. But I think we do need to expect sort of a little push up through to here, and then the move down through to here. But when we do see this move down here will push stocks to the upside, and while this moves down here, then we'll see the S&P 500 sort of chip away at the 2000 point and above. So anyway, we'll keep an eye on this, and with that in mind, looking at the S&P 500 now, and it's all going according to plan. So in a bit of a nutshell, we're looking at this pattern through here in one way or another being corrective, and then we're looking at this being an impulse wave up for 1 here, and then back for 2 here that we were looking for yesterday, last session, and then we're looking for a move up. So if we drill into this little area through here and get a bit more detail on that, then this would be it here. We were looking for a 50-60% retracement level back into the 1960 area, but it was plausible that it could also stay above the 1965. It was all part of part of group 2 here. Group 2 is 65, 72, and the 80. So it's held in there quite nicely. And yeah, so we've got wave 1 up to here, wave 2 back to the 1965 area, and then we've got this little move up through here. So if we keep that in mind when we're drilling into this little area here, just on the 10-minute chart here, then, you know, yesterday we were counting this up here as 5 waves, and I'd taken that off the cash market, off the S&P cash market, just to get a better count. And we were looking for our retracement back into the 1960 area, but possibly staying in the group 2, which it did. So we're looking at this move up here as a small wave 1, and we're looking for a wave 2 to come back. So the 50% is always the top of the circle, and 61.8 is the bottom of the circle there. So once again, I think we could focus on the cash market, and the 61.8 for the cash market is back at 1970. So keep an eye on the cash market. We're looking for a move back into 1970, was practically there anyway, and then a move up from here. So you can pretty much buy new highs through here. So a move below into 1970, and then finding support on 1972. Then you can move in long from that point and start building a trade. Now, the other point here that I need to make is that is that this, if this is wave 1 here and this is wave 2 here, then we'll see wave 3 up here. Now in wave 3 there'll be 5 waves, so we can look at this as 1, 2, 3, 4 and 5 here. So this point within the structure here should move quite swiftly here. Okay, so it is earnings season, so check to see what stocks are coming up and what's expected of them. And but all the same, yeah, we're expecting a bit of a sharp sort of push taking these highs out through here. Okay, and this would sort of show up through some of the other markets, such as the Dow Jones as well. So we were counting 5 waves up here for wave 1. We were looking for an ABC back. I can't remember exactly price point we're looking for there, but would have been reasonably close. And now we're looking for up for wave 1 and A and a B and a C, sort of coming back into this little block here, that little block there. That's where the support is, where the most volume was done and dusted, and then a move up from that point there. So a safe trade would be finding support on 17, or taking the move up above the 17.05, 50 here, the 1750 area as such. And yeah, you can continue to add all the way up through there, because the Dow Jones works every 100 points, extremely well, and that's the way to sort of scalp it, from 100 to the next 100. So you can be looking up at 200 here, but obviously we're expecting it higher than that as well. The European markets are slightly different. The DAX and the S&P normally sort of follow each other, but they're in a different situation at the moment. Now, just on the 4-hour chart here, without getting into a lot of detail, the sell-off from the trading level 1 here, the 10,000, we're looking at this now as the A, the B and the C wave onto this trend line here. And this trend line is not the strongest thing in the world, but it is there, and it will have some sort of impact. So we're looking for that to complete. So in waves, from wave B to wave C here, we're looking at it like this here. So we have to look at this as being wave B, and wave C down here in 5 waves. So the 1, the 2, the 3, the 4 and the 5 here, and there'll be 5 waves in here as well. So in fact the low can actually be in there now, sitting right there, but it's good to buy new highs. So if you see strength in the cash in the S&P 500, then look for support, tested support on top of group 1, which would be 96.30, and then look to add on 50 as well. And then of course you can add on these other levels on the way up there as well. The FTSE's got better shape than the DAX, and still looking at this as being 5 waves up here, an A and a B and a C here, and looking for higher ground here. So we're looking at this being wave 1 up here and wave 2 back. Now some of this structure here I don't particularly like that much. I mean, this move here is like in 5 waves, and this is a retest of supply here. So it's at a point of weakness at this area here. So looking at this, it could actually move down here. So if it's going to follow the other markets to the upside, then I suggest looking for support on the midpoint, the 67.50. So tested support on that level, even a breach above that level there, would create the long trade. So I'd be very careful about taking it below that level, because this particular move here looks corrective in terms of an A and a B and a C, and this here looks impulsive here as well, meaning to the downside. So a little bit of caution on this one. So we want to see this is like a little head and shoulders here, I guess. So we want to be above. We want to be on that midpoint there. That's where the supply is. That's where the bids are. That's where the bid's going to be hit. So we want those moved out. We want support on that level there. So the ASX 200 is also, well, it's sort of bit of a merger between many markets at the moment. But one thing I can say here is that we're above 5,500. That's a positive. So the next subtle sort of level to the upside is group 1, and group 1 is 10, 20 and 30. So finding support on top of 30 like it has here, it's tested it, it's bounced off it again. I mean, that's a positive here. I mean, here it couldn't find support here, could it? But here it looks like it's got support here. So there's a reasonable chance that we can move up from here, and it would be the metals market that would be the material sector that would be taking us higher, because they were higher overnight, the aluminium, zinc and copper and so forth. So that would be the catalyst to the upside. This particular structure here, it doesn't count very well, but if I line it up with the Dow Jones and so forth, then we would take this as wave 1 up here and wave 2 coming back here, then wave 1 and wave 2 coming back, and then moving up here. So in a bit of a nutshell, as long as that 5523 stays intact here, then this market should move to the upside. Yeah, so if that's the case, just buy new highs on the way up. It's that simple, really. This move here is corrective, so that also helps me, well, tells me that we should be taking this high out through here. Just got to be a bit careful though, because this is not a real clear situation up here, so we could actually have an A and a B and a C wave down to here and then up. I don't think that's the case, because I can see what this pattern is here. So I think we're positive to the upside. Once again, it's just nice to buy new highs, so 55.40 as support, or a breach above that would be the tip to the upside, and also the midpoint here. This market works quite well with the midpoint, so being every 50 points. So as you can see here, and currently it's resistance, isn't it? So once it became support, then we can look at this market moving to 5,600. That's where the flip side would be, shifting the balance. Alrighty, that's it. Thanks for tuning in.